Good morning, I think. Oh, let's look. I'm live on YouTube. I'm going to start off the podcast with this chart. It's comparing Apple, Dow Jones, and the S&P. And you can't see it because of my... because of the... But okay, we're going to start the podcast. Let me make sure I'm on TrendSpider. Let's go to Strategy Tester. Strategy Tester, come on. God, this thing is so slow because of the resources that I use. Oh, it's not TrendSpider at all. This thing flies. I may have to go out and buy a new laptop. I wish I could do the live broadcast on my iPad or something of the sort. Run. Haven't started the... Hey, morning, Zephan. I'm going to start it off. Let's run it. I got a ton of MACD cross-ups today. Okay. God, that's a great looking chart to buy into. Okay. Let me start the podcast. Good morning. It is Tuesday, September 27th. Starting the podcast with a little look. I was doing some comparisons, and I'm going to let you guys do this. Go to cnbc.com, type in Apple, and when you type in Apple, do a 5-year chart. And in the upper left of the chart, you'll see a comparison. And you can compare the .SPX and .DJI. That compares the 5-year of Apple to the S&P and the Dow Jones. And I don't want to compare it against the NASDAQ just because I want to show you something here. But remember yesterday I brought back the Dow Jones, and the Dow Jones has completely retraced to February 2020 before the pandemic. What I wanted to show you is that the Dow Jones, again, it's showing 1% just based on, you can drag this chart back. Again, it's a 5-year chart, but if you drag it back to March of 2020, February of 2020, I should say, before the big downturn, you'll see Apple in the time period is up 99%, whereas the S&P is only up 10%. The Dow Jones says up 1%, but it's been kind of even. Today, the market's up. I've been watching the markets all morning. So my point is that it is a stock picker's market. And while everybody is calling for 10 to 20% down, that Apple number of 99% up is quite shocking. And for the market to come down, Apple would have to come down with it. So I wanted to show this chart, and I'm showing it up on YouTube. So if you're not subscribed to my YouTube channel, get on it. You can look at it right from the start here. That's what I wanted to start with. The other thing that I noticed, by the way, in looking at SPY, let's go back to TrendSpider, and we'll look at SPY. I've got a ton of scans for you guys to look at, but I want to start with this overall market. The SPY daily RSI is sitting at levels we haven't seen since, I believe, a few years. It's kind of time, essentially TrendSpider looked at it, and I posted this on my Twitter. I posted a couple of things on my Twitter this morning and yesterday, but the daily RSI is sitting at levels we haven't seen since January. It's probably time for a relief bounce. And today you're seeing that relief bounce. The S&P is up 1.5. The Dow is up 1.2. The NASDAQ is up 2%. So I wanted to look at that. There was also, again, let's look at SPY. You haven't had this bounce. Here's the trend spider look in the algorithm. You haven't had the bounce yet. So it's still not a time to necessarily get big in the market. But I do think that we've been oversold so much. Look at that RSI. It's kind of trending upward. It's at 34. Yesterday's candle, it was at 27. So we're looking at an oversold market. What do you do in an oversold market? You kind of wait. You've seen in the past, you look at this July 18th buy. You had the run. It got you out. It got you back in here, but it got you out a little too late because the button hook was too quick. Are we going to see another little bounce kind of like that? Maybe. There's nothing in the market that tells me that, hey, we're going for a huge rally. That's the problem. I think what you're seeing is simply an oversold bounce like we've seen in the past. Powell is still expected to raise by 75 points in November. Some of the leading indicators indicate that things have turned around, so maybe he's going to be a little bit more lenient, but we don't know. So you play the bounce that you're given. As far as long-term, there's some great long-term buys. I posted an article last night from Motley Fool, two stock market sell-off, two safe stocks to buy right now. And spoiler, the two stocks are Apple and Microsoft. Those are two stocks that, in my mind, I think Apple has set this floor at 150. Let's take a look at Apple. It's up 2.3%. Right now in the market, I'm making probably a ton of money on this one, but it did have a MACD cross up, and it's been kind of capitulating around this 150 mark. Do I think that you should buy it at 150? Absolutely. I think long term at 150, you're seeing the iPhone 14. They're able to release the iPhone 14 in India. They're raising their price on the App Store because of currency devaluation in other markets and the strong dollar. They have pricing power. They didn't increase the price of the Apple iPhone 14. Part of the reason is because their margins are still strong. We haven't had the price hasn't come up. It'll probably come up here in the afternoon candle. But I think anywhere between 150 and 155, you're safe buying for long term. Do you want to time it? You can't time it. Is it going to go down to 130 again? It could. If we see a stock market crash, Apple will probably lead. But put some long term buys in. I think, in my mind, I'm so confident on this. I still haven't sold Apple. Microsoft had a MACD cross up when I was doing scans. We'll look at this one. Home Depot yesterday had a cross up, and I think it was up in the market. We'll take a look at that one. But Microsoft on this one, we had a MACD cross up. It's held up particularly well since I'm going to close. I wonder if that's pulling some resources. But Microsoft, you got out of Microsoft probably right before this slide. You got some gaps up here in Microsoft that probably need to be filled. And so what we're looking at, you had an entry at 237. You're trading at 240. Is it too late to get in? Hell no, it's not too late to get in. Microsoft is, look at how low this MACD is right down here. Look at the RSI. These are indications that it's time to buy. Again, this is a short term, so it's a 4-hour candle. It's not a huge daily candle. But in the algorithm, again, through 237 is the buy. So you're just below 240. It's kind of come down. I don't think it's too late to buy. Kathy Woods was on this morning, and she's launching a venture fund with Titan. Titan's a big hedge fund, and you've normally needed hundreds of thousands of dollars to get into Titan, and they're launching a venture fund, which typically you need a lot of money to get into a venture fund. Cathie Woods is bringing her research, her ability to pick stocks, and Titan's ability to run hedge funds and venture funds and find private companies. It's a good one. You can get in for $500. Check out ARK's website if you want more information, but I was more interested in some of her indications on the market because remember, Cathie Woods at the core is an economist. She's an economist that knows basically the overall macro economy. She's been way too bullish over the past year. Her stocks are down. She's been buying things of crazy nature, like Teladoc and some others that I just don't think are going to go up. But she says deflation will come and the Fed will ease up from now on. She thinks we're currently in a recession, and from here on, we're going to see a pivot. She believes that Powell probably will look to start reducing rates next year. She's still bullish on two stocks in particular, Tesla and Roku. And I wanted to take a look at Tesla here in the algorithm because you've seen Tesla hold up incredibly well within this major downturn. I don't believe that Tesla will get hit down to the 250 level because I've talked to several friends who work for Tesla, and the quarter's looking good. The outlook is looking good for them. They had a recall. I think my Model 3 is getting recalled. It's a 2018 one of the ones that was built in a tent. But you've gotten out here of Tesla. It got you in at 281. You got out here. I think you're going to see another MACD cross up. And I think this one, let's pull this one up. There's still quite a distance here. I still say that probably 270, 275 is probably the pivot point on this one. You can't time it. Again, in July, you had this run up here, July 8th, and it got you out August 19th with a 25% gain. The average gain on Tesla in my algorithm is 21%. Now, the algorithm gets you 68% over 1,000 candles versus a 95% win on just buying and holding. So you've got an opportunity here to wait for this one. I don't know that it's necessarily going down. It's up 5% in today's market, 4%, 5%. Let's look at Roku. Roku is one that, in my mind, they have a tremendous, I should say, operational issue in that I just don't think that their devices are very good. I think their interface is set up to monetize, and I think that's fantastic, but I just don't like their boxes. I personally, in my house, have Apple TVs. I don't mind spending $100, $200 on a box to know that it's going to work and to know that it's going to melt into my ecosystem, which I particularly like. Now you can see here, let's close this down a little and let's bring this. We're going to shrink this down so we can see this entry. The most recent Roku, 3% gain. The average win on Roku is 9.71, so it rounds up. The problem with this is long-term, for buy and hold over 1,000 candles, you've lost 68%. With my algorithm, you've lost 53%. It's hard to find a win just because it's so far down. The MACD is about to cross up. Do I recommend it here at 59? No. Cathie Wood's been buying a ton of it. So she's saying that we're going to see an upturn. Roku might be one of those that we see an upturn in. So this was interesting. Since 2017, I saw a chart and I couldn't recreate it on CNBC. But since 2017, ARK is up 14%. The S&P is up 45%. Quite a difference. Quite a difference in that. The S&P has just outperformed her in 5 years? by a tremendous amount. So she doesn't have that much conviction, that much, I should say, backing to her claims that her fund's going to beat it. I wanted to take a look at, Tom wanted me to look at Boyle. Boyle, it was bouncing. I think it's lost its way again. I think, let's look. Boyle. This is natural gas. I think LNG is probably a better play on natural gas just because LNG, Schneider Energy will buy cheap gas over here and sell it over to Europe. The problem that you're having is it looks more likely that Putin may have some type of peace in Ukraine. He may be forced into something. I don't see a MACD cross up here on Boyle yet. It's not even close. It's so oversold, though. I mean, that's the problem. It's hard telling you to buy Boyle or KOLD. Here, Boyle is at 54. Let's look at KOLD because I think KOLD still has quite a run going to it. But I don't know that I see it. Let me look real quick. Again, you'd have to be a fortune teller to know exactly where these things are going, but KOLD has had just such a run. It went from 1383 is where it's at, the buy. I mean, you've had, 2 wins. The last 2 have been over 10%. So, KOLD has been the play. So, let's look at, Tom likes Coinbase too. I can take a look at Coinbase, but I don't think that one's crossed up. Coin has been beaten up. This rides with cryptocurrency. So the price of Bitcoin, the price of Ether, the price of all of those goes with Coin. Coinbase is one that Jim Chanos is shorting. It's his biggest, he said it's his biggest conviction since he shorted Tesla. And Tesla made no sense. This one, he's been more right than he has been wrong. But I don't see a cross up here on Coin yet. I do see that the last time you made 3% when you bought at 65 and sold out at about 67. This one on the algorithm, you lose 72% in the algorithm over 1,000 candles, 22 positions. Average win is 7%. You lose 83% if you bought and held. I don't believe that. Personally, I like Mara more than I like gold or coin. And the only reason I like Mara over Coinbase, I think Coinbase takes fees, and I think you're to a race to the bottom with fees. I think they will go with the brokerage house route, which is they will start free trading. I think FTX is going to probably lead that charge to free trading and reduce fees. My take on Mara is they mine it. So when the price is lower, they mine a little bit more heavily. When the price is higher, they start selling. So they take their money and then they put it back. Now, Mara, your average win is 121%. Do not expect to get 121%. You had a recent 112% gain on the algorithm. And see that button hook right there? That button hook you could have gotten out of. See how long it waited to get you out? And that's because that run was so dramatic. This one has you out. It got you out with a 2% loss last time. You could have taken a gain, but it just crashed. You probably have a MACD cross up coming soon. The RSI is down at 34. Again, you probably have something coming soon. One that Tom wanted me to take a look at as far as the chart goes is SCPH. This is pharmaceuticals, SC Pharmaceuticals. Tom's a doctor, so he kind of is in the pharmaceutical space. May know something about this. I don't know if he has insider trading. I don't know if he has anything insider on this one, but the entry on this one was $4.74. You're at $5.39. The RSI indicates that you're slightly oversold at 61. So if you got in down here, Tom, at $4, I might get out unless there's some type of catalyst that you know of. I don't have all my earnings and dividends and things like that, so I don't see the catalyst on a lot of these stocks. And it's just because, again, my system is a little bit restrained with running all of these programs. But I with that red candle, it does still have confirmation. I just worry because it's run so much. You can see the last run here. This has been a great one. The average win on this one is 8.55%. With the algorithm, you make 2%. With the just buy and hold, you lose 30%. So the algorithm absolutely makes a difference here. And it's a buy and hold stock, in my opinion. You can see from August 5th, $5.11. And then you get that button hook. And you would have sold out with a 13% gain. Missed all of that downturn, bought back in at $4.74. And you might be going back up to the sixes. You're at $5.39 now. It does have confirmation, so you probably have some time to wait to see if it does lose confirmation. You can see the 9 and the 21 kind of crossing up there. That's a bullish signal. The 50-day is still negative. If you get that death cross, that blue line crossing that red line right there, which is the 50-day crossing under the 200, that's what's called the death cross, and that would indicate more bullish, bearish signal. So at that point, I probably would pull out and not hope for a lot more run. But that's my personal opinion. Now let's get to some of the ones that I saw that I really like. These are companies that I think have a really good future, and they're just too low at the current price. Nike, under $100. This is a $120 stock in a decent market. It's a $120 stock. This was beaten down because China, they've lost kind of their China stuff, and with China shutting down, people weren't buying clothes and they weren't making enough clothes, and their margins got shrunk and their inventories had a problem. You see since the last purchase, you lost 0.35% on the last purchase, and then it just crashed. It doesn't have a MACD cross up here, but you can see about 95 to 96, you're putting in this kind of capitulation here. What I don't know is that capitulation kind of like we saw here before it took a bigger leg down. Let's look at Nike's fundamentals in FinViz. Because Nike's one of these companies that's really well run. You're paying higher up for it. It's a PE of 25, a forward PE of 21. It pays a 1.27% dividend. Year to date, you're down 42%. That's crazy. Reiterated, Telsey Group outperformed 130 to 125. That was September 26th. That was just yesterday. September 22nd, outperformed by RBC Capital at 125. September 20th, they downgraded it from 125 to 110, but you've still got a crazy, crazy run. If you go up to 110, that's 20% from here, 10%. August 9th, downgrade, BNP Paribas outperformed to neutral, a 118 price target. You can see these price targets are significantly above where we're trading right now. You got a Motley Fool article. These two stocks will make or break the market rally. Nike's included in that one because you can read that article right there on FinViz. I like this one. I like this one under 100. Another one that's under 100, and we can look at the TrendSpider chart. Disney. Disney has a problem if we do go into a recession. They do have pricing power. They can charge whatever they want with the parks, and people will pay it. That's essentially what it is. They have shown with the parks that that's crazy. God, what did my friend spend? Like $10,000 on a Disney vacation with him and his two kids, which was, not a crazy amount. A couple of weeks, I think it was, but it was a nutso amount for me at least. I thought it was crazy, but you can see this downslide. It hasn't had a MACD cross up, but it's completely oversold. The RSI is down at 20. That MACD still has some time to cross up. You've got some volume shelves here that kind of predict like this may be capitulation around 96. You're trading at 98 today, but we may have more downside to go. Again, you just don't know. You can't time it. But if you're looking to add a long-term stock into your portfolio that might be trading over 100 in the very near future and gaining you somewhere 10, 15% if the market even starts to rally, Disney is one. Uber, we talked about before. They're starting to make money. They've made some money. The Kashkari, who is their CEO, has turned this company around. I still don't think Uber Eats is as good as DoorDash, personally, from a service standpoint. DoorDash seems to work with the restaurants better, and they seem to have a better quality delivery service. The apps are essentially the same. The order process essentially the same. I just personally like DoorDash better. I don't know why. I can't tell you why. The algorithm does not do well on this one. The algorithm loses you 40%, 37% to be exact. The buy and hold over 1,000 candles loses you 21.75. Your average win, though, on this is 12.5%. So you have to pick and choose where you're going to buy. You can clearly see in the algorithm down here that this floor at 21 is a likely capitulation in a horrible market. The problem is with their last earnings, they really made a pop. And you can see this from 23, which was the purchase on July 18th, all the way up to 33. That was their earnings, right in that neighborhood. They've kind of covered that gap that they saw before. The gap here down below is at 25. If you're looking for a long-term purchase, I think this one, if you buy Uber at 28, are you afraid that it's going to go to $5? No. You're afraid that it might go to 25. Big deal. Hold on to it. You can hold on to that one and just ride it out. It's a well-run company. It's one that I think is capitulation and has a lot of upside to it. We can even let's look at some of the most recent. We'll go into FinViz and look at, we'll look at FinViz and Uber, their PE. It doesn't show PE. I know they might be making money on an adjusted basis. But you can see August 3rd, Raymond James, market to outperform, $38 price target. In June, Wedbush, $38 price target. May, Bernstein, 45 to 35. Again, you look at these price targets and it's crazy. They year to date, they're down 35%. So they've been holding on a little bit better than most of the tech stocks. A fourth one, Bank of America. Bank of America, you can see clearly this drop here. It does not have a MACD cross up. So I don't know that I'm getting in to actually trade this one. But from a long-term perspective, you're at $30. These are stocks that in higher rates, they will be able to charge more and get more for loans that they hand out than they will to pay interest. I mean, they're paying nothing on their money that they have right now. The consumer is still strong according to Bank of America. And $30 in my mind is a great price for this. I think this is one of Warren Buffett's biggest holdings, and I think he was buying in the 40s. I don't think he's continued to buy, but he's continued to hold it. So Bank of America is one as well. One that I particularly like down here, and you guys know I like it between 11 and 13, is Cleveland Cliffs. The problem is if we are in a recession or going to a recession, this has a danger of going to 10. They do make money. When we look at their FinViz, some of their fundamentals, the PE is 1. Their forward PE is 4. They don't pay a dividend, so you're basically banking on this company making money. The performance year to date is down 40%. January was the last downgrade. Wolf Research outperformed to peer perform. Their price target was 23. November 21st, November 2021, Wolf Research initiated coverage at $30. Goldman, October of last year, has a neutral to a buy from 26 to 24. You're trading at $13 right now. Year-to-date performance, they're down 40%. Again, this is a commodities play. That's why it's been killed. I still think that this one has 10 to 15% every time we look at it. Let's see. We've got the algorithm makes you 79% over 1,000 candles on this. It's 102% if you buy and hold. The average win on this one is 15%. You do not have a MACD cross up on this one. Let me make that clear. You do not. This is just something that I'm watching. So it's my mind. It's a good one. Tesla. We looked at Tesla a little bit before. Let me see if I don't know if I pulled up the chart. I think I did, but it's holding up well. I just have it on my list as something to watch. Scans. I'm going to go over my scans real quick to try. Yeah, Tesla's it's got that gap down there at 250 that makes me really suspicious about buying it here. But it's a great one. Let's look at scans. So the first scan, and I think I went over this, Microsoft. There's no reason to buy Microsoft here. There's no reason not to buy Microsoft here. Anything under 240, you load up the Brinks truck. I posted that article from Motley Fool yesterday. 2 stocks, Apple and Microsoft. I think they're 2 of my biggest holdings. I think Amazon's another one. But I've got a lot of money in this one. It had a MACD cross up at 237, I believe. Let me look. 237.46. So if you want a specific price, 237.46 is the MACD cross up on this one. Xpev had a MACD cross up. Let's look at this one. Xpev. God, my system's so slow. I have to basically fill in the gaps here. Xpev is a Chinese automaker. They are similar to NIO. NIO has battery swaps. Xpev is one that has autopilot that is considered to be stolen from Tesla. They had an engineer who left Tesla who wound up working for Xpev. And I think Elon Musk wound up suing him. I'm not 100% sure, but if you look at their autopilot feature on Xpev, it is just so similar to Tesla, and that's prior to Tesla's visual full self-driving. But we had a cross up here at $14.36. I think you're trading below that at $14 today. So it's down slightly. But Xpev had a cross up. Those 2, by the way, came from ARK Funds check. So ARK Funds owns both Xpev and Microsoft. Another cross up that we had here, and this is because Macau opened up, the Chinese capital of gambling. It's basically the Asia equivalent to Las Vegas. And Macau had been shut down or restricted because of COVID. So that wound up opening up. And you saw yesterday when Sands, MGM, anybody with exposure to Macau started going up. This one has a MACD cross up here at 66.80. You're at 68.13 right now. So Win is one that went up. Beyond Meat is your alternative meat product that you see in the grocery stores. They beat Impossible to the grocery stores. They beat Impossible to the public markets. So they got a lot of hype around them with people going meatless, blah, blah, blah. They had some Beyond Burgers with McDonald's. They had some Beyond chicken products with Kentucky Fried Chicken. I read an article yesterday about getting free. If you want to just Google it, type in free Panda Express Beyond. You use the app and it's buy one, get one free. This had a buy-in at $14.54. right now I can't recommend this stock for a long-term buy. It's kind of like App Harvest. Love the business, hate the stock. And it's based on valuation, but your average win on this is 15.65%. The problem is that you only win 19% of the time. You lose 80% of the time. So, but 1454, it does seem to be oversold. The RSI is down. That means nothing because it's been in this. If you're looking at my chart on YouTube right now, you can see that RSI has been in that neighborhood for so long. No reason to buy this one, but I wanted to bring it up because it did have a cross up. KDP, which is Keurig Dr. Pepper. If you use a Keurig for your coffee in the morning, there is no reason for you not to do this, to buy this. If you use the Keurig products. If you are like me and you just buy Walmart coffee, and yes, I get made fun of by all my bougie coffee friends. I buy Walmart coffee in the Keurig products. So I don't drink much of it. I drink decaf. And yeah, I think everybody on YouTube, I think Zephan and some others were telling me, yeah, it's not real coffee. But I don't drink real coffee. But you had a MACD cross up here, Keurig Dr. Pepper at $37.28. You're trading at $36. The markets have taken a downturn. It's not negative yet, but we're probably going negative, just so you know. And I'll bring that up. O'Reilly Auto Parts. You guys know the jingle. Probably have heard it on way too many NFL games that I've seen broadcast. But O'Reilly Auto Parts had a MACD cross up. This is one that has been trading at higher levels. You have this gap. You can see this shaded orange space right here between 707 and 662. It had a cross up here at 693. I believe that's 693. Let me just make sure. I'm going to pull that over. Yeah, it's 693.29. The last purchase you had was 707. It's kind of floundering here. You see how that MACD just hasn't moved. The RSI hasn't really done anything. It's kind of capitulating here. The 200-day is kind of maybe moving just along this straight line. The 50-day is down. The 9-day is down. The 21-day is down. But it did have a MACD cross up. I am not super confident in this one. Again, I don't go into O'Reilly Auto Parts, so I don't exactly look at this one, but it was a cross up, so I figured I'd bring it up. Old Dominion Freight, if you guys remember, this is trucking slash, I think it's mostly a trucking company, but we had a rail strike that was promised, which was going to shut down a lot. Tom, by the way, has been just sending me about the rail stuff and shipping stuff. I'm not a huge fan just because I do think that we're in a recession or going into a recession. And I think shipping is going to be probably hurt by that. So, but Tom has made a killing. If you want to read, just go and look at my ads on, and find Tom. He's shown me all of his charts that he sent me. But I haven't been big on shipping. Old Dominion Freight is one that I do like. It's one of the leaders. 248.02 was the cross up. I like this one, and part of the reason I like this one, ODFL, let's go to FinViz and look. ODFL. Because the price targets on this one are significantly high. You look at, oh, come on, pull this up. There we go. 260 is the price target. And again, you're trading at, I'm waiting for 249. So you're looking at $20, 260 price target. That was August 17th. 282 in June was the price target. 280 to 300 in June was a Wells Fargo. So you do have a higher price target than this. The PE is rather high. You get a 0.48% dividend through this. Your 52-week range, you're up to 373. So you're 33% off your 52-week high. You're only 7% off your 52-week low. I don't think that a shipping company like Old Dominion is going to go back to their 52-week low. You can see there's a clear double bottom here right around 240, 235. I think that's probably where a floor has been set on Old Dominion. So with the cross up, I do like that one. Apple, we talked about how to cross up. Adobe had a cross up. ADBE. Let's look at this one. Adobe is a software as a service. They have significant brand. They have subscription services that anybody in the design world uses Adobe. They just purchased, I forget the name of it, but it was another design. And this, you can see this gap down was their earnings. Have they been beaten up too much? Probably. Look at that RSI just kind of floundering. It's been oversold ever since it was at 16. The RSI is only at 22 and it's come up. It's probably putting in this floor. You can see this gap here. There's two gaps. There's one at 308, 306. They do have valuation problems. And we'll go to FinViz to look at it. This is I think it's a Kathy Wood's favorite. But I'm not quite sure. But Adobe is one. 27 is the PE. They're trading at a forward PE of 17. They don't have a dividend. So you're counting on this one to be a grower from a stock perspective. They are down 51% year to date. It's 60% off its 52-week high of 699. It's only 1% off its 52-week low, which is 276. So if you think that it's going to go down even further, and again, they made a huge purchase for this additional software program. And that's the problem. That's why the market's beating them up, because quite honestly, they overpaid for it. So Adobe's one. Google just had a MACD cross up. GOOG. We'll look at that one. And Google, you guys know, I've been recommending Google. It's under 100. There is no reason not to buy Google here under 100. Keep adding to it as it goes down. The assumption is that in a recession, advertising is the first thing to get cut. And Google, the majority of the revenues are on advertising. So you've got a MACD cross up. I don't know that it's going to give me, no. The GOOGL had a cross up, just to be clear. But I do recommend the GOOG. It's about to cross up. And you're under 100. There's no reason not to add it. Google, great company. I would add that one to your Apple and Microsoft as the three companies that you, again, I'm heavily favored. Still in that FANG trade, but take out Facebook, take out Netflix, and, take out Amazon. Amazon's a great one. They just spent too much money over the pandemic expecting everybody to continue on. And I think it's just got some growing pains in it. So, but Salesforce CRM is the next one. This had a MACD cross up. The pricing isn't there. It probably will be there. But you can see it's capitulating here around 150. The valuation of this one is what the problem is. When we go to FinViz and we look at CRM, the valuation is the big problem. Its PE is 273, and the forward PE is 25. It's just too high up. It is a transformational company that will continue to basically innovate and be something that companies can't live without. They don't have a dividend. You're down 42% year to date. You're 52% off your 52-week high of $311. You're only 2% above your 52-week low. So I do think that this one is a good opportunity to buy. Okay. Sorry, YouTube. I had to pause that. Okay. So I like CRM. I hold CRM in my portfolio. It is slightly, it is a super small portion. So finally, I wanted to look at UVixy. Because we've seen this big downturn and there's a possibility we're going to see a big upturn. You guys know I like UVixy under 10. It has not taken off the way it probably should have. Even though it's above the 10, I said continue to buy it under 10. And right now it's at 12. Your purchase in was, I think, just 1041. You're at 1227 right now. It's still got all the confirmation in the world. It is overbought. So again, we're going to have this kind of little probably rally. I don't expect it to be sustained unless something crazy. There's some type of catalyst, some type of thing that comes out. Maybe the job market gets killed on Thursday, but we're waiting for that catalyst. Uvixi is one that I think you could have bought under 10. You guys know that I love it. Yeah, I'd love to trade that one. Personally, I haven't traded because I've been working. This week I might trade though. Yesterday I couldn't. It was Dad's birthday. Remember your market kind of indices. So for a bull, if you think it's going up, UPRO tracks the S&P. For bear, SPXU. For the bull on the NASDAQ, TQQQ. For a bull on the semiconductors, SPXL. Bear on the NASDAQ, SQQQ. And if you want to just bear on the ARKs, which has, again, this SARK is a bear on ARKKK. ARKK. I like all of those. All of those I think you can use in a market to day trade and to take a look at it. Remember, oil, UCO, UCO has been destroyed, by the way. Absolutely destroyed. The reserves are at an all-time low, not an all-time low, but the lowest they've been in 40 years. We have to refill those. You're going to stop distributing the reserves in October. So you have less supply. This has all been, it's been a crazy one. Occidental's almost at 60. Devon's almost at 60. Start buying again. Under 60, buy it all day long because I think going into the end of the year, I think you're going to look at oil, but probably just over $100. It's 70 today. So UCO, you're at 26. The asset performance, buying and holding has made you 273%. Buying with the algorithm, you've made 47%. Your average win is 22%. You've had some crazy runs in UCL. You've only won 32%, so you've lost 63%. I'm sorry, 37% wins. So, but continue to take look at oil as an asset. Google, by the way, GOOG, 99.48. Buy it when it's under 100. I'm telling you, you might go down to 92, but 10 years from now, you won't care. You won't care if you bought it at 99. I looked at Apple. Remember we looked at the Dow yesterday, how it was trading at February 2020 levels. Guess what Apple was trading at in 2020, February 2020? 85. It's almost at 160. You've almost doubled your money in 2 years. That's a crazy, crazy move. And in a market now that is significantly down, it's held up. Those are the companies you want to buy. So I'll leave you with that. I am out. I will post this one for your listening pleasure. But remember, tune into YouTube to see all the charting information. So take care. Have fun. I'll talk to you tomorrow. Okay, let's go over here. Oh, top 5 dividend long-term hold. I should have read your note, Zephan. I'll look at that top 5. Let me just export this real quick. Share, export song to disk because it'll take forever. I hate this laptop. It's 2015 MacBook Pro. I'm going to take this off because I think I'm on my... the built-in microphone here. Zephan, top 5 dividend. I would say one of them probably has to be ARK. So the way, what's this doing? Is it? Yeah, it's exporting. Okay. I'll do it on tomorrow's. I'll put it down to talk. I'll do some research. I would say I have a bunch of those XL dividends, XLV, XLK. I don't have the XLE. I had the XLF, but I traded out of that one during the pandemic. Those are really good ones because they just track sectors and pick a sector which you like. But VOO is probably one that pays a good dividend. And when we talk dividends, I kind of point to more ETFs because I think stocks that pay dividends typically. So a company has two choices, Stefan. They can either reinvest in their own company, which is termed quote unquote growth, and that grows the stock price, or they can pay a dividend. The companies that up the dividend either will not invest in their own company, or they know that their share price has either hit a bottom or is at the place where they can't grow it. And a perfect example of that is Devon Energy. Devon Energy pays a 7% dividend, or MPLX, which is another one that I have for the dividend. And I've just bought and held it. MPLX pays an 8% dividend, I think is the yield right now. Devon Energy pays almost an 8% dividend. They've just had a tremendous year because of energy, but they pay a dividend because they don't reinvest in their company. When I throw you ETFs like ARK pays a pretty good dividend at the end of the year. And you know, it's not horrible, but it's a one-time dividend at the end of the year. A company like XLV, XLK, they pay quarterly dividend. So they're just like stocks, but they pay out based on what the stocks and the holdings pay out. So that's a good one that's why I say dividend. For instance, I'll give you AT&T was always a favorite of the dividend players. Hey, get AT&T because it's solid business. Well, you see where AT&T is now. I mean, before the pandemic, I was recommending that one at 40. It's now down, 16, 17. And its business hasn't changed tremendously. It's just a race to the bottom. So why am I talking into this mic when the mic is over here? But I'll put it down in my notes, Stefan, for tomorrow. Top 5 dividend players. But I'll probably steer it towards, let me see, title. Wednesday. Zephan. Top 5. I would tell you, Zephan, at your age, fuck dividends. Don't play for dividends. You should play short term for dividends. But take that capital and reinvest it into growth. You want growth. You're young enough that the risk is worth the growth. If we're in a long-term recession, kind of like 2000 to 2010, you should be able to see the growth from this point onward. If you bought at the high in January, it might take you a few years to get that back. But yeah, if you're talking about really F the dividends, yeah. Because your dividend players don't grow. They're giving you money back, but it's short term. Apple pays, a 0.24% dividend? It's nothing. But I'd tell you, invest in Apple all day long. Amazon doesn't pay a dividend. Google doesn't pay a dividend. They reinvest in their company. And that's why you want to know that there's good management there as well. A good example is, what's a good example? Cisco or Intel. Intel's even a good company. a good example of this. Shit. They had the chance of reinvesting or giving a dividend. They had a dividend. They paid that out, and they just didn't. They didn't reinvest in the company, and they lost ground. So you see the stock price has been taken to the cleaners. Now, dividend. Their new CEO, I think, is reinvesting in the company. So I think that's a decent purchase on that one. God, and I hope my camera was okay. I didn't look at this damn OBS feed. I just hopped on. Okay, Zephan, I'm going to go. I got to shower, get my day started. It's too late in the day. I'm going to post this. I'll see you tomorrow, man. I'm going to stop the broadcast. Enjoy your day and get some sleep. You wake up way too early. See you guys.